Hello, my dear listeners. Today video I'm gonna be analyzing Bitcoin miners. Please not consider anything I'm going to say in this videos as financial advice. And if you find the information relevant, please like this video to help my channel. So for the disclosure, I have to say that I hold a position in the Riot, and yeah, the companies I'm gonna be analyzing, it's a Riot and Marathon. So the first, I have the chart of the Riot here, and well, as you can see, we have diversions here on a daily RSI. Okay, so it's been very oversold, and it's like I could say this is maybe continuation of this falling wedge of the consolidation down here. And well, if we rebound, the resistance will be in the area of $14, and if we break through that, the next resistance it's in the area to the $22, but we fall far away from that. And the support I see, if we fall down, the support, like to see the support, I have to go basically on a weekly chart to justify my support around $4. So we have maybe well, of course the companies can continue to deteriorate further, but at least, like, it's due for the rebound from those levels. And now to really see what is happening, I'm using this company's website, where they post the press releases every month. They talk about their production. Basically, what I like about Riot, they well, if I compare Riot to Marathon lately, like, they've been producing for the past 3 months, they produce more bitcoins than Marathon. And it says that in June, Riot sold 300 bitcoins, generating net proceeds of approximately 6.2 million, which is like, they financing themselves by selling some of the bitcoin they produce. So they produce 421 bitcoin. They have a fleet of 42,000 miners and 4.4 hash per second mining power. Okay, so if there is some statements that they working on this cooling technology that they expect, or they foresee that it could increase the miners' performance by 50%. And well, they have here this stating about their how many miners they received since last month of date. Riot received an additional 1,273 new miners, deployed 4,600 miners, and there is a 6,300 miners are staged for deployment in July. So upon deployment of the staged miners, the company will have a total of the near 49,000 of the units, mining units. And they also have here, if you by January 23, Riot anticipated total self-mine hash rate of 12.5. From 4.4, it's nearly 3-fold increase in the hashing power. So assuming the full deployment of 115,000 miners that this anticipated to receive and install, well, my personal opinion, I think they're not going to be achieving that, because I took their current number of miners, which is 42,000, and in the next 6 months, basically, they need to deploy 12,000 units, 12,000 mining units per month. And lately, at the most, they deployed 5,000 to 6,000 units at the best each month. So, but even they may be overstating like how fast they're gonna achieve that 12.5. Well, even if it takes 2-3 months or 4 months more, but I think conservative maybe it's gonna take 6 months to 8 months more. Like, yeah, I'm not really like know how fast they progressing, but in my opinion it appears a little bit like my personal comment that they overstating how fast they're gonna deploy those miners. Every time I read those monthly report, I think they are doing that because they previously promised that they're gonna deliver, like it was a kind of plan that lay out let's say a year ago, that they're gonna be deploying all those miners by January. But there is what you plan and what is the reality, and now they kind of committed to that. But let's see, maybe they will be. But I'm very positive. Even the company will increase their Bitcoin production by double, like in the next 6 months. I will consider that's very, very, very good, and maybe we will see Bitcoin rebounding by that time. Okay, so now about the Marathon, they didn't post their monthly report yet, but what they have here, they had basically hurricane that hit their facility in June, and they have Saturday says prior storm 30,000 miners Marathon has held in Montana. Over 75% of the company fleet. With those miners offline, Marathon Bitcoin production is expected to be significantly reduced until repair to the power generating facility in Montana can be completed. So, well, they've been lagging before that. I've been following, like you can go in press releases each month and see month to month how they been doing. It's very actually nice that the company does it for their investors. They can follow on their progress every month. Not every company does it, but I think that they are in trouble here for the short term. So they're not going to show, and on top of that, the Bitcoin price is down. They're saying here that they're going to relocate their units to third party temporarily to have some Bitcoin production, and they are working on a new facility anyway. Well, but I think they're going to be in trouble in the near term. So the second quarter and the third quarter probably production will be like there's going to be disasters. The other thing I found, like why I like Marathon less, because they never sell any bitcoins. They keep all bitcoins, but it's dependent. Maybe some investors will like it more, but I think it makes sense to finance your operation by selling some of the bitcoins that you produce. Wherever what I go on a Finviz to analyze the share floats, and this is the Marathon, and I always look those share floats, outstanding shares, and this is remain lower. Because they only have 96, about 97 million. I also look a short flow here. You see the Marathon is very, very heavily shorted right now. 29% of the shares are shorted, and I also looked the institutionally owned, they now 39% institutionally owned. So this is two positive signs that can help the company to rebound quickly, assuming that bitcoins we see Bitcoin exiting the bear market. And what is the big point to Riot compared to Marathon here? It's the share flow, because I followed those companies for a very long time, and Riot used to have much less shares than the Marathon, but now they diluted, they have 114 million of shares now, and I checked, they had only 101 million shares I think like last month. So the issue to finance themselves, they issue over 10 million shares like recently. So that's a lot. Like, so the companies that continue to inflate their share supplies are like, because more shares you have, more pressure on the price. This is something I follow, very important to follow, like on a growth company, how many shares they have. Like your short flow, you see it's very high too. It's 23%. But anyway, I'm satisfied, like having the position, and that's how I'm playing basically this sell-off in Bitcoin. This is this more simple and maybe leverage way to participate in crypto market. It's very risky way also, because those companies are very volatile. If you see their long-term chart here, or if you see the weekly chart of the Riot, it was the high basically of $80. I remember, and now it's the high was $80, and the company is now in $4. So but you see, well, there's potential, in my opinion, downside risk for upside potential is good. If you believe in the crypto market, that's something maybe you could consider. Thanks for watching, and please comment and like the video.